What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. I'm recording live from Monterey, California. I'm over here at the Fisherman's Wharf, hanging out, taking a couple of days off. Every time I take a couple of days off, the market turns to red. Don't know why that is, but it just seems to be the case often. Energy was the leading sector. It was the only sector really in the green, but this could be just because it's working off some overextended levels that we saw some massive sell-side activity, right? It was down over 20%, the XLE, in just a short period of time, and now we're starting to see some days where it starts to bounce. The overall market fell fairly sharply today. The Dow Jones was down almost 500 points, and this is coming after some economic data that was released, both with consumer confidence and the Richmond Federal Reserve, or the regional manufacturing survey came in a little bit lower too. We'll go over those charts momentarily, but if we take a look here at the heat map, once again, you can see that the big dogs, heavy market caps, were in the red. Tesla was down 5%, Amazon down 5%, Meta was down 5%. These are some big moves. Microsoft down 3%, Apple was down just about 3% there too as well. If we take a look at what's on the calendar coming up, we do have some Fed speakers that could potentially shake up markets here a little bit, right? So Jerome Powell's tomorrow. We also have another Fed speaker here. This would be the one that could potentially move the market a little bit. We'll see what he says. We also have GDP data coming out here. That's not considered really a heavy market mover, but it's still important to see. We have personal income. We also have ISM manufacturing, which we talked about that in a prior episode when we talked about copper and copper breaking down. We're starting to see a little bit of a bounce working off of these oversold levels. If you don't remember that, I'll tell you quickly here. Copper is an economic metal. It's a good, they call it Dr. Copper because it's a good gauge on economic activity. And if you look at the ratio copper to gold, you can see here we were pointing out how in line this works with business confidence, all right? And business confidence measured in ISM, and that's coming out here July 1st. But you can see these three humps here on a 10-year chart. And if I just switch over to the ISM, manufacturing chart, boom, three humps. And I will say that I believe that the forecast is, yes, it is less than where it's currently at. So the previous was 56.1 consensus and forecast, right? So this is trading economics forecast. It's 54.9. So we'll see here if it even surprises more to the downside and kind of follows the path of what just happened with the copper to gold ratio. We also had the consumer confidence, as stated, come out, and this was a 16 month low, and basically worries about inflation and the economy, which we kind of know. We've seen these numbers before. We're just getting updates, and the market didn't respond all too well to that. Here is the manufacturing number that the Richmond Federal Reserve came out with, and you can see here is its lowest since, I believe, lowest since May, and the prior was -9, and this is a -19 reading here. So also some, poor economic data, just kind of stacking on top of each other. What did the market do with all of this data? Dollar started to take off again. It's still overall in a sideways consolidation in bullish context. And what do you know? The dollar, when it has a nice positive day, S&P 500 equity markets go down. We've been talking about that. So we'll see here if that current correlation continues and if we get some stronger move to the dollar. If we do get a stronger move to the dollar, it could very well continue to perpetuate the equity markets obviously down as we've previously seen. Oil, it's bouncing from the level that we discussed on the trend line, 100-day moving average, getting a couple of days up. I'm thinking here, this is a big hit to the downside, so we're just working off these levels. It would be nice to see if we can squeeze up just a little bit more over here and then potentially start to look for actually short opportunities to see if the trend continues to put down lower highs. As you can see, we have a high, lower high. Let's see if this one puts in another lower high and we can try to catch it. You could do, you could see if it comes above an area of resistance and then buy on the way down through it. There's a bunch of different ways to do it, but that is something that I'll be paying attention to. What else happened today? We had our first distribution day, right? And that was only day 2 after the follow-through day. So that did not take long, which indicates what? It indicates that this follow-through day will unlikely be the bottom here in the market. We'll see. What we said on the prior episode, right? Distribution days, 1 to 2 days after the follow-through day result in a 95% failure rate on those follow-through days. So yeah, Distribution day, what do you know? We've been talking about the trend continuing to be down. Unfortunately, it is what it is, but this is just day one of a distribution day, so we've got to continue to monitor and see how this all plays out. Let's keep on going here. We have the Qs. They closed just outside of their weekly risk range, right? We still have multiple trading days left in the week. Remember, the last 4 out of 5 weeks, we've closed outside of the weekly risk ranges. So if we start dribbling more out of this, right, it could get pretty nasty pretty quickly. I'm not anticipating that, right? We have the holiday weekend coming up, and this is where kind of like confuses me a little bit. Typically, volume's lower. So today, you know, if you have big traders potentially leaving out on vacation or whatever the case may be as we're moving into 4th of July holiday, perhaps they did, you know, a lot of exiting of positions potentially today, and decided to probably go vacation, come back, and we'll see here if we just get kind of some, you know, sideways action or doodle around the lower risk range for the remaining of the week, and then it starts picking back up on the next trading week when we have the trading activity pick up again. If we take a look at the Qs, right? Qs close right down there on the weekly risk range. I try to play a bounce intraday, and it pretty much tagged the bottom for the most part, and then it started moving up quick. I didn't like the intraday price action, so I moved the stop to break even. I was stopped out of my position. Now I'm looking to still go long. I would like to see it come up through the 5-day moving average, but in this type of environment, how do you navigate it? You cover on red, and then you typically short on green, depending on what sector, you know, it is that we're talking about here. But typically right now in this bear market, it's the Qs, it's tech, and so forth. SPY's a little bit more difficult to short as of now because it still has some stuff in bullish trends, mainly energy. At least it wasn't a bullish trend, and now we took a big hit. If we take a look at the SPY almost came to its weekly risk range. Obviously, distribution type day, more volume came in, big day, closed at the bottom, very bearish, but perhaps, you know, if 68% of the time kicks back in and the options market becomes efficient again, price should close within this weekly risk range. So we will see here. It doesn't mean that it can't go outside of it, right? But we'll see here if it picks back up and comes inside of it, which could make for, you know, shorter term intraday trades from outside back to inside and so forth. If you take a look at the 15-minute time frame, we're back below that 5-day moving average. You can see that we're not too far off from filling this gap, and this prior price action can act as resistance. So if we come down here, that could potentially act as a bounce level. So if you remember my video prior, I said I was looking for either a pullback down to here or to fade a strong move up here, and we're getting there. I'm more focused as of right now on the Qs. So if we start getting outside a little bit further, maybe just tomorrow morning, depends on where we open, I might just re-enter and try to take another stab at just kind of a morning pop on these shorter time frame charts. But we'll see. RSI is oversold right here. PMO is starting to curl back up, and you know, we're right there at the lower risk range, and that's also right by this prior price action here. So things are lining up for a potential back shot to the 5-day moving average. I'm not trying to play it up all the way to here. Cool. Can it come there? Yeah, obviously it can play up to there, but that's a pretty large move in a short period of time, and the 5-day moving average is already acting as an area of resistance. As we can see, it went down, came back, and moved back down. So short-term bounces is kind of what I'm looking to play here. Let's go ahead and go to the IWM. The IWM also closed on the low of the day. Not nearly near its lower risk range like the other index products, so be careful there if this one wants to start shooting down a little bit further. Small gaps been obviously getting obliterated in a bearish trend too as well. If we take a look at the 15-minute time frame, you can see this is one that's actually trading above the 5-day moving average, and the RSI is not quite overextended to the downside. So potentially, if you want to play this from a long perspective, you can see if it tries to hit this lower risk range quick and fast, play into an area of prior resistance, which could become a level of support, or you can see if it comes back, fills a gap, play it from, you know, if it starts picking back up, you want to buy into strength, or you just wait to see if it goes under and then picks back up and you purchase in right around this area where you get confirmed strength versus buying here, letting it go against you and then seeing if it turns back around. You technically would get the same entrance, right? Boom, right, and boom, but you wouldn't need to go through this period right there. So it's always important to look for that strength to come in. Now, keep in mind, volatility across the board, it's still high. So RVol, Russell volatility, is still above 30, right? And we're still in this contraction pattern, looking at that weekly time frame. NASDAQ volatility, it's still well above 30, and it's kind of forming this inverse head and shoulder type pattern. We'll see here what makes of this. And then we obviously have the VIX, not above 30, which is, but it's still relatively high. We closed today at 28.36, and you might have not seen this chart before, but the reason why I'm showing this chart is because you can go back in time, right? We're dating back to 1998 over here, and you can see this 40 level, every single pretty much bear market and, thing that took place, we had some sort of capitulation event outside of the 40 marker, and the S&P 500 is down 20%, right? And we haven't even had a move above 40 yet. So can we obviously go lower? Have we seen capitulation? No, not. I don't think we've seen capitulation. So yes, I think that it's very possible that the market could obviously head lower. Hence the prior episode where I said, this isn't a stock market bottom? But we'll see, right? We need to give it obviously more time. You just got to continue to play very tactical here. Once we start seeing capitulation, if that even comes, then we can get a little bit more excited to start really honing in on some key sectors that have been building strength. Speaking of strength, we talked about healthcare, right? So we talked about healthcare and energy, obviously, on the prior episode. Well, healthcare came into that area. If you did decide to short it, right, this was one of the more stronger ones. And even from not a seasonality perspective, but from a market cycle perspective, we discussed, even seeing all this strength, it was still one that I was looking to fade. And I did get out of my position today. I traded inverse biotech, and I started that position a little bit ago. But if you were able to trade this to the downside, healthcare was down 1.74%. Still possibility of more downside, but on these big red days, I'm just pretty aggressive with taking profits. So that's what I do. Let's take a quick look at Bitcoin. Saylor to Schiff ratio, I haven't talked about it recently. Why? Because, it's been since early April since we got our last sell signal, and it's fallen from, 40,000 to around 17,500. We saw a little bit of a bounce, which we discussed on Twitter as it was running into one of these anchored VWAPs that seemed to be an area of interest. And now we're starting to, sell off again, right? It's down 2.26% as of right now. It's down to 20,250. It kind of wedged up here. I might have to redraw this, but it was wedging up, and now it's kind of breaking down from that level. We'll see here if it starts to base out, pick up, do something. But as it stands right now, I just wouldn't touch it with a 10-foot pole from the long perspective. My strategy with Bitcoin and Ethereum is to wait for my signals, and my signals, they're just not there. I will say that like when it's down below zero, you can look to short equities. And that's what I've been doing as well, right? One, during this cross right here, we talked about MicroStrategy, and that thing has fallen 70% since that signal. So yeah, if we cross back up it and it's still a bear market, I'll see if we get another whipsaw type trade. Like this one was a whipsaw, that was a whipsaw. Those were my only two crypto trades really here in 2022. So I'm flat on the year, which it sounds not that great, but given the context where it's 40,000 and now it's at 17,000, I'm okay with that. I'm just trying to beat buy and holds with this current strategy. Okay, that's all I got for you, everybody, on today's episode. Actually, wait, no, I have Ethereum too. Yeah, Ethereum, just breaking down from a falling wedge. That's all I got for you on today's episode, everybody. If you have any questions, leave them in the comment section below. I'll try to answer them. And I'll probably be back with my full computer and everything, get a little bit more in depth Thursday, most likely Thursday. I'm not even actually too sure if I'll be able to put together a movie on Wednesday. That's all I got for you. See you later.